particular point here. My stop loss was just below, slightly below 0.618. From there, we had the market doing what? Smashing our TP1, which was this point here, which was about 50 pips. And we also had the market doing what? We also had the market smashing our TP2 here, and overall the trend line, which was actually ending up to 100 pips at that particular. Hello guys, welcome back to my channel. If it's your first time coming across my channel, don't forget to smash that subscribe button, leave a thumb up if you like this video, and make sure you watch this video to the end. So today I'll be doing a different video because mostly I've been doing vlog videos. So today I decided why not create a technical video for you guys, of which you guys have been requesting me to do more of these videos. And guess what? Today is the day that I get to show you guys how I actually analyze my chart. So I'll be showing you guys what I'm looking for, because we're starting a new week. Today it's a Sunday. That means a few hours to the opening of the market. That means the market will be opened a few hours from now. So I'm actually looking at a few pairs that I'll be showing you guys. So definitely in this video, I'll be also doing a market breakdown for you guys, showing you guys how I actually get to analyze my chart. All right, sorry. So stick around. Don't forget to leave a comment down below on what video you want me to do next. So stick around. Don't forget to watch this video to the end. All right, so coming back, we can see that on my chart, we're actually having a very nice GBPUSD that I've been looking at for the past few weeks. And last week, I actually caught this nice buy, which was 800 pips. So I'll be breaking down GBPUSD for you guys as the first pair that I'll be showing you what I'm actually looking for and my overall anticipation. So GBPUSD is what I'll be firstly breaking down for you guys. So this is what I was looking at overall, and this is my entry that I did last week. So I'll be just deleting everything so that you guys get to see what I was seeing in order for me to make that entry and why I did that analysis right there. So we're going to start with the weekly time frame here. I really like starting from the weekly time frame, and majorly because we are starting a new week. So we can see that last week we had a very powerful bullish candle here. 10 days all represents a week. So that means this is last week, this is the other week before last week, just like that. So this was last week's candle, and looking at it, it's very green, which means it's bullish. That means the whole of last week, Monday to Friday, we had the market, we had more buying opportunities on GBPUSD once we get to start moving to lower time frames. So on the weekly time frame, we're just going to do a bit of psychological analysis. So from there, we're able to see that we had a previous high, which was this point here, and we had another high which was higher than this. So this clearly shows that we are in a bullish overall structure on the weekly overall time frame. Then from there, we had the market creating a low there, and this is where we currently at. Then what else am I interested in? A market structure trader, a support and resistance trader, I'm a trendline trader. I know a lot of people out there don't believe that trendlines really work, or support and resistance don't really work. Well, I do use support and resistance for a very long time now, and it really does work for me. So the first thing that I look for whenever I'm analyzing is market structure, of which we have labeled market structure. We can see that we had the market breaking or disrespecting the previous high, which was this particular point. This deeply tells us that we are in a bullish market structure. That means we have the market having strong buying momentum, and obviously we're more likely to create another high above this particular point because we are still in a bullish market structure. Aside from that, we can see that we have this supporting trend line here. So like I mentioned, I'm also a trend line trader. That means I really consider I use trend lines in short in my trading. So from here we can see that we have a nice supporting trend line here that supported that supported that point, and later did what, and later broke below that supporting trend line. So that clearly shows that we are no longer in a supporting market structure, or sorry, in a bullish market structure at this particular price here, because we have the market violating or disrespecting this supporting trend line. Hence, that's why we were able to see that massive sell at that point there. What else are we able, or what else am I going to pick out on the weekly time frame? We can see that we have a strong support at this price, and at that price, which turns out to be our zone. So from there, I'm just going to shade this point, creating a very nice zone at that point here. So we can see that we have a very nice zone that the market came to tap in here, and also came to tap in at that particular point, creating a double bottom from our support zone. From there, I'm not going to actually do much on the weekly time frame because I don't want to over congest my chart. As a result, my first rule whenever I'm analyzing is to always keep a clean chart. Always keep a clean chart. So I'm not going to be doing much on this higher time frame because moreover, I'm not looking to make an entry from the weekly time frame. So what am I going to do next? I'm going to drop down to the smaller time frame, which is the 24 hours. I'm going to drop down to the 24 hours time frame. So the 24 hours is actually the daily time frame for those that might be confused. So from here we can see how strong this supporting trend line was previously acting. So from here, you guys need to understand that I'm this high, and from there we had the market massively massively selling. So we were in an overall downtrend on this particular point because we're on the daily time frame, meaning every candle represents 24 hours. So we were bearish for a very long period of time when we look at this range here. And before this bearish, we were once in an uptrend, of which we can see that the market was doing creating new highs above the other high. So that means previously we were in an uptrending market structure, and previously again we were the market switched from an uptrend to a downtrend. So from here, the market disrespected this uptrend structure and creating a downtrending structure here. Then from there, we can also see that we have a beautiful trend line, which is a resisting trend line. So for those that are coming across trend lines for the very first time, so trend lines, these are parallel support and resistance. So they're just like normal support and resistance, but the only difference is that these are in a parallel format, and these support levels here, they are in horizontal format. So from here, we had this resisting trend line here that highlighted this bearish structure, of which a trend line helps you to highlight the trend that you're in, of which we were in a very strong downtrend here, and also helps you to highlight selling or entry opportunities, of which we could have made an entry at this particular point if we were to be at that range there, and also would have made we might have taken advantage of that entry as well there. What else are we able to see on the daily time frame? We're able to see that the market is disrespecting our resisting trend line. This means as long as the market is below this particular trend line, we are looking for selling opportunities. It is not an uptrend. It is not an uptrend, not until the market does breaks above. So when the market breaks above this trend line, this simply means the market or the buyers are looking to start their own structure, or the market is preparing to start a new structure from a downtrending market structure to an uptrending an uptrending market structure. So the only time that we are going to have a confirmed uptrend is when the market takes out this particular point, of which we can see that Friday's candle took out the buying momentum on Friday took out this resisting trend line here, causing us to start looking forward for potential more buying opportunities. What else are we able to see? We are able to see that previously we had the market creating a high, we had the market creating a low, high, low, high, low, high, low, high, low at this particular point. So we are not yet in a confirmed uptrend despite the market buying, not until the market does what? Not until the market takes out takes out this high here. So as long as the market is below this high, we are likely to push to the downside, not until the market does breaks above. So we are most likely to have this, and then able to see on the daily time frame, because I don't really want to congest my chart very much. So let us move to the 4-hour time frame. So moving to the 4-hour time frame. So for you guys that have been with me, you now know that most of my setups are done from the 4-hour time frame, and most of my entries are also done from the 4-hour time frame. That means I'm now looking for more swing trades, because I'm now transitioning from a day trader to a swing trader. So most of my entries are based on the 4-hour time frame, but that doesn't mean we cannot move to the smaller time frames lower than the 4-hour. We're actually going to do that, showing you guys how you could have taken advantage of this both as a swing trader and as well as a day trader. So looking at this at the bigger view, we can see that the resisting trend line was actually acting perfectly drawn from the daily time frame, and still the market is still respecting this trend line even on the 4-hour time frame. So moving in, we can see how nice the market was reacting to, and we also have a very good rejection at that particular price. So if we were to take advantage of this particular point, we would have taken advantage of these selling opportunities there, where we are looking to put our stop loss just above the range. We're looking to put our stop loss just above the range. From here, we can see that we would have caught this massive sell, and obviously there was a support level here that we would have used as our TP, and from there we would have managed to catch about 137 pips on GBPUSD alone. So from here, this was a very wonderful trend line that was highlighting selling opportunities. Not only that, we can see that after this, the market had to touch our support. From there, we had a very nice correction, of which we know to say exactly we are in a downtrend. That means we are looking for bearish impulsive moves, which are actually stronger than the correction. So this is just a correction phase of another impulsive move. We can still see that the market failed to break above our resisting trend line, and this still confirms that this is a very strong resisting trend line that we are going to be using to look for selling opportunities. What happened? We had the market reaching this point, failed, reaching that point, failed as well. We might have taken advantage of this sell. Let's say if we were to take an entry around this point here, we would have placed our stop loss just above the range, which is the resisting trend line at this particular point. We know very well to say we are in a downtrending market structure. That means the market needs to take out this low and create a low below, and our TP1 would have been smashed, and as well as our TP2 would have been smashed at this particular point as well, collecting up to the total of 200 pips. This is actually a massive sell that happened here. Then after that, we can see another opportunity that presented itself right there. Then from there, this time around, it's very different. This time around, if we get to look at this point, it's very different. we are no longer respecting this point, or the market is no longer respecting this resisting trend line as it was before. We can see the market did what? Broke above it. How did it break above it, or how can we confirm that the market has broken above the resistance, or it has disrespected a trend line? Simply because we had the market closing what? Closing above this point. Previously, we can see that the market was actually respecting it by creating candles below this particular point. So now we can see that the market did something different here by creating what? Creating this nice bullish candle above it. That means that it has disrespected it, and hence the market is simply telling you that it's looking to push, or the buyers are looking to do it, to push further to the upside. So starting out, we can see that the market massively dropped to the downside, coming to touch our zone, tapped into our zone. Then we can see that massive buy to the upside there. Then aside from that, we can see this wonderful opportunity here that we had. We can see that we could have taken advantage of this buying opportunity that started from here. Why? Because we had the market breaking above, just like what I explained here, where the market once was respecting this trend line, then broke above, came back for a retest. Then from there, we can see how the market created a new high. We had a low, we had a new high here, and we had a low. So last week, opening up last week, I think that was on a Thursday, we had the market at this particular point here before all these things had to happen. So from there, I'd missed all these trades here, all these opportunities, simply because I was focusing more on gold. So from here, I thought, okay, the market is still pushing to the upside. The market is still pushing to the upside, and we didn't yet reach this trend line here. So I was still looking for buying opportunities to actually touch my resisting trend line. So this is how my analysis was, and from there, market structure always plays a very important role in my market analysis. So from there, we had the market creating what? We had the market creating a low, high, low, and a new high. So what was I supposed to do at this particular point? It's definitely knowing to say, after the market creating a new high, the market needs to do what? To create a new low. That's where I brought in my Fibonacci, stretching from the lowest point to the highest point from there. And from there, we can see that, let me just do this, let me bring these things here, so that we get to see the levels nicely. Okay, so let me bring them to the right. Okay, so from here, I actually get to use my Fibonacci in a sense where this is my reaction box, or my reaction zone. So I expect the market to react in between what? 0.05, 0.5 and 0.618. For those that are in my Telegram community, they know very well that I make use and take advantage of Fibonacci levels and the zone actually, which is this. So if you're not in the Telegram community, make sure you know what, you click the link below this video to actually have access to my free setups and Telegram as well. So from here, I was looking for what? I was looking for opportunities and reactions within this zone, and I was looking to buy above this 0.5, which was actually a 1.23023 level price. So from there, we had the market coming back, testing. We had candlestick rejections inside the zone, and as well as at that particular point. And as well as for me, in order for me to make an entry, I really respect candlestick closure. So from there, we had candlestick closing above. Our entry was around this particular point here. My stop loss was just slightly below 0.618. From there, we had the market doing what? Smashing our TP1, which was this point here, which was about 50 pips. And we also had the market doing what? We also had the market smashing our TP2 here. And overall, the trend line, which was actually ending up to 100 pips at at that particular structure there. So from here, this is how easy I caught these buying opportunities using my simple method, or my simple strategy on analyzing the market. Aside from that, like I explained, the market did something different here because my stop loss was just at this resisting trend line, hoping to say the market is going to do what? To reverse. But to my surprise, the market did something different by breaking above it. So from here, this simply means we are no longer going to be looking for selling opportunities from this resisting trend line. Why? Because we are now above it. So this simply means the buyers are still looking to push higher. That means we can have the market pushing to this point, and later we notice at resistance we get to have sellers coming from that point. We are likely to have the market coming back for a retracement or a retest in order for us to do what? To take out that high, and obviously we'll be targeting these higher points such as this point for our next TP. Then from there we would definitely now have a very strong established uptrend, having a low at that point. My anticipation when it comes to GBPUSD on the 4-hour time frame, I'm still looking for the market to favor buyers, or to be very bullish as we open this week, and still we'll be looking for buying opportunities as well. And from here, this is what I'm actually anticipating to see the market touch this point, then come back for a retracement in order for me to do it, to continue looking for buying opportunities. So let's see if we can drop down to the lower time frame. Let's see if we can drop down to the lower time frame and just see what opportunities we can get down there for those that are actually day traders. So if we get to move to the lower time frame, which is the 1-hour time frame, we can see that the market is actually going to seem very clear with many candlesticks. So for me right now, I'm actually settled on being a swing trader, and this is the exact thing that we still have in the 1-hour time frame. And same applies to a day trader would have taken advantage of this same setup by waiting for the price to come back to the zone, which it did respect this zone exactly just as the Fibonacci retracement predicts. So from there, we had the market coming to tap in this point. You would have made your entry from there, or look for any confirmation around this point, which has to do with candlestick confirmations. And I don't know what confirmation you guys would prefer to use as an individual trader. So from there, we had a very nice high low being created here. What did we have? We had the market pushing all the way to this particular point here. So this is my analysis on GBPUSD. If you want to see more of this analysis on this channel or on your screens, make sure you leave a comment down below on what topic you want me to tackle next. So on the 1-hour time frame, just like we are saying, we also have the market that turned from this particular point. So this still this level here, which is our resistance level, still marks to be a sensitive point. As a result, we know to say in future, when the market comes back to this point, we are likely to do what? We are likely to touch to reverse, then do what? Then drop down. So if we drop down to the 1-hour time frame, we can see that the market is actually reversing, of which we had a high and a low there, and a new high. So we definitely need to come back and respect that point and do it and push to the upside. So same like we did here, we can as well as do it at this particular point here. So let me just move this thing here, and we are stretching from what? We are stretching from this low and that high at that particular point. So this actually helps us, if Fibonacci helps us to measure a possible reversal end, of which it's in between 0.5 and 0.618. This means that the market, this bearish, we can have the market selling from that point, reaction in that point, and we'll be looking to buy from where? From above 0.05, and from there we'll be looking to take our buying opportunity from there. This will be our TP1 and overall TP2, which is about 71 pips at that particular point there. So like that, this would be my setup on the daily time frame as a normal day trader, and as an everyday day trader looking to trade this this setup here. So you'll find that on a daily on the 1 hour time frame, you're actually going to catch a minimum of 50 to 70 pips, which is actually this trade is actually less than 100 pips. So in order for you to catch 100 plus pips, you're actually going to use or aim higher, which is using the higher time frame, such as the 4 hour and the above time frame. So this is my analysis on GBPUSD, and if you want to see more of these setups, make sure you click the link below to join to have access to my free Telegram community. And if you loved this content and would love to see more of this content appear on your screen, make sure you thumb up this video to help with the YouTube algorithm. And if you are a new subscriber, make sure you also share this video. And if you haven't subscribed yet, make sure you smash that subscribe button, and also stick around, watch the previous videos to help with your technical analysis. From here, this is where I end, and obviously planning on posting more videos, so stick around, turn on that notification bell. I'm signing out.